there's been an 8-month China-Australia political and trade conflict. Now, lots of commodities have been targeted, but not the main trade, which is iron ore. But this week, there's been a bit of activity. Rio Tinto and BHP were in discussions with the steel body, which is in China, which is China Iron and Steel. They've been talking about high iron ore prices. Now, I'll go first to Atilla and ask him, look, you see these chats with China Iron and Steel. Now, these are very routine discussions. Now, let the audience and readers know if there's any point in asking miners about high iron ore prices. And iron ore prices are high not just due to demand and supply. There are other things involved.
It has done. It has kept prices, I guess, relatively inflated between November. Blast furnace capacity utilization rates were running sort of 90-95%. However, through November and first half of December, capacity utilization has started to actually drop off in China. You're seeing iron ore demand recovery through the rest of the world, but we're still not really much higher than where we were in Q2. So demand is relatively robust for steel and underlying iron ore consumption. But you have other factors at play in the iron ore market, which is relatively high. And one of the facets to this move has been what we believe a bit of asset price inflation. You've got some sort of zero to close or negative or close to zero interest rates in major economies. You've got a huge stimulus events in every major economy. I think totaling, if not more than $20 trillion. So when you have those dynamics in the markets, the hot money, as it were, is looking for assets that will return, significant growth, and that's generally. And I believe we've already seen that in precious metals, and we're now starting to see that in industrial. And as institutional and retail investors on the Dalian Commodity Exchange, Shanghai Futures Exchange, punting on steel-related commodities as a speculative play for economic growth next year.
Yeah, right. So just really quickly, the Dalian Exchange is a massive place. We're talking a lot of traders, and we're talking big money here, right? We're not talking a few traders here pulling a few dollars. So this can really move prices in a big way? Absolutely, and
the sort of pricing mechanism, what generally tends to happen with iron ore, which is quite unique, that's a lot of the Chinese physical traders will have an app on their phone, will be tracking developments in on the DCE. Almost instantaneously, they will amend their bids and offers in the physical market at the Chinese ports based on the developments in the futures contract. Then the port side prices will then impact the seaborne markets, which is where we're seeing these parabolic increases for Australian and Brazilian material. So it really sort of stems back from this speculation. Yes, fundamentals are a little bit tighter compared to where they were a couple of months ago. Have been dropping off. Arrivals have been dropping off at North Chinese ports. You've got some supply concerns next year about whether Rio are going to be able to meet current production or production growth levels. Yeah. But those supply concerns have obviously helped iron ore break out of the $130 sort of range. But what has happened is that this speculation on the DCE has overbaked the increases. And just one last stat to throw at you, if you're looking at the volumes week commencing 7th of December, there were 10 million lots traded on the DCE iron ore futures contract across all contracts. Typically, in any given week, the volumes are about sort of 5 to 7 million lots. So you can see the sort of major increase in speculation on the futures markets.
Sure. And just real quickly then now to Daryl, obviously now the media is painting this as a bit of a, China Iron and Steel grilling BHP and Rio about this, but in actual fact, these conversations are routine. Now, do you see either country targeting iron ore in this conflict?
That's an interesting question in the sense that what's going on is a broader commodity market shakeout is the best way of putting it. What we're seeing is an efficient market in operation. So we've got iron ore trading within an upward sloping trading channel. So we've got to use that as a background to the context of what's taking place at the moment. Are we going to see iron ore used in the same way that perhaps China has used tariffs on barley and so on? The answer is probably no at this point in time. And Australia is certainly smug enough in the belief that iron ore will not be targeted in this way because they believe Australian iron ore is so important and fundamental to China's economic recovery. I suspect that this belief is probably false. And we know that the Chinese are very actively looking for other sources of iron ore and that they have the capacity, particularly under the Belt and Road project, to develop those very, very rapidly. So we can't sit back from the Australian perspective and say, yes, we're perfectly safe. We have a lever which we can apply against China. I know that the Australian iron ore producers are more concerned perhaps this year than they were several years ago about the potential for sources coming from outside of our current supply regimes.
Yeah, interesting. So, I mean, earlier this week you had some politicians, backbenchers, saying that, in Australia calling for a levy on these iron ores, that every time they send a shipment to China, they'll put 1% on it and charge China a tax. But now, what do you think about that? Is that a reasonable, a fair thought bubble, or, just more political maneuvering?
One of the features of democracy is that every silly idea has a chance to grow up and become national policy. The reality is that Australia makes so much money out of its iron ore exports that the prospect of putting a levy on it, what is the point of doing that? It's not even a decent thought bubble. In fact, the Treasurer's budget report, mid-year financial update yesterday, really rests on an increase in the iron ore price. A levy? We take away the very prosperity that we're looking for. So yes, it's a thought bubble and not a very sound thought bubble.
How do you see Australia and China handling this conflict thus far? Are they doing well at it, or are they just getting worse?
It's a template of how not to handle relations with China, and that's certainly the way that it's being viewed through much of Asia. This is what you can see in Australia. Not a good process to follow. You're going to have all sorts of problems, not just in terms of China reaction, but in terms of being able to move trade forward. So how do we resolve it? And that becomes a key question that is beginning to occupy the minds of a larger number of Australians sitting in our Houses of Parliament. And of course, it's occupied the minds of business for much, much longer. And diplomacy is the answer. This idea that we create international policy by standing on a soapbox and making loud pronouncements sells very, very well to a domestic audience, but is not a good way to handle an international relationship.
Yeah, neither countries need to stick to trade with each other. They have a free trade agreement, but it's not compulsory. But is it essential that these two partners continue to trade? Because they're very complementary, aren't they?
They are very, very complementary. And you are quite correct. CHAFTA, China-Australia Free Trade Agreement, doesn't compel Australia to trade with China, nor vice versa. However, even though we're complementary, we have to recognise that there are other sources of iron ore. They might not be of the same quality, they might not be able to be accessed quite as rapidly, but they do exist, they are in place. And we know that China is busily operating or exploring these alternative supply options. It's more than Vale. There are other alternatives available as well. So we need to treat this with a great deal of caution, dial back the rhetoric, and certainly the iron ore miners are suggesting that we need to tone down the discussion so that we can create a smoother environment where trade can resume and resume in a respectful way that's not destroyed by politics that's really designed for domestic consumption.
Perfect. Thank you very much, guys. That wraps us up for today, and thank you very much for speaking to our readers and audiences.
No problems. Thank you, Su-Lin.
Thanks, Su-Lin. Thank you very much.